Hello, blockchain fans. It's your friendly Ian here, Ian Collins on the Blockchain Show. And what a show we've got for you this week. We've got a new concept which we're going to be talking about, which is stablecoins. And we've got a great guest on the show who's going to talk about his coin and why it's a little bit different. So thank you very much again for downloading. I hope you enjoyed episode 100. And if you didn't, then it's worth downloading. It's me, myself and Mark with Ethan chiming in, talking about what we've enjoyed over the past year and what we see coming up. Anyway, welcome to this episode. So I'm going to hand you over to Xiaohan, who's going to talk about stablecoins and what they are. Xiaohan, welcome to the show. How are you today, sir?
Fine, how are you? It's my great pleasure to be on the show with Ian and Ethan.
Thank you very much for being a great supporter of the show and helping us out. It's great. But first, what are stable coins? I've never heard of these. Can you tell us what are they and why are they different?
So stable coins, contrary with the typical cryptocurrencies, which tend to be volatile in price, stable coins tend to the design goal are typically to have a relatively stability in price, so people can use it as either for payment or for basically shying away of the volatilities as a hedge, essentially. For example, the most famous stable coin people are mostly people own cryptocurrencies, they will be familiar with is USDT or like Tether. So this is probably the biggest stable coins out there. So their currently market cap is around more than $1 billion. Used to be much more than that. So people typically use Tether as a way to hedge their risk when they try to move away from cryptocurrencies in exchanges. So it's used as like a dollar symbol in the exchanges. So there are several different kinds of stable coins out there in the market. And so most of their design goal is to for satisfy the need of exchanges, crypto exchanges, especially the token-to-token exchanges, because they don't have a legal or regulated way of providing on-ramp and off-ramp with fiat currencies. So they actually just need to have a symbol of US dollar so they can trade against. So the project we're working on is called Meter. First, we are not coin that's one-to-one pegged with US dollar. It's linked to a stable value in the cryptocurrency, to the physical world. So if you think about it, when we look at cryptocurrencies, none of them are really currencies. Basically, a currency should have three functions. Basically, a unit of account, medium of exchange, and store of value. So right now, most people are sort of accepting the fact cryptocurrencies is a good way to store value. But for medium of exchange, people tend to complain they're slow, they're costly, especially like when network is congested for Bitcoin and Ethereum. And for unit of account, basically you need to have a unit that represents a stable value in the physical world. Haven't been fully solved. So basically, we're solving these two problems, trying to basically create a stable unit of account that's native in the crypto world, and also solving the scalability and performance issues of the cryptocurrency at the same time. So that's a problem we're trying to solve.
So first of all, a stable coin mirrors a fiat currency.
So right now, most of the stable coins on the market either mirrors fiat currency, for example, US dollar, or they try to mirror like a gold or some other like commodities in the physical world. So this is done by something called oracles. Basically, someone depend on how the cryptocurrency designed will feed the data of the price of the currency. Either US dollar or like whatever the asset they peg to the blockchain. And there's a process to adjust the supply and demand for the cryptocurrencies to match what's out there, or the Tether approach is basically they have 100%. They claim they have 100% reserve in U.S. dollar, and they provide one-to-one backing for on-ramp and off-ramp. Although recently there is some controversy around that, right? So these are the typical approaches. There are typically three approaches. One is the just now what we mentioned, 100% backed by USD or gold. The other one is crypto asset backed. For example, there's a project called MakerDAO. They're using Ethereum as collateral. So, for example, you put in one Ethereum as collateral, you can issue probably half a Ethereum worth of corresponding, they call it DAI token, which pegged to US dollar as a stable currency out of it. Or there's algorithmic approach, like I mentioned earlier. So basically, for the first approach, it's a fully centralized approach. Basically, someone has to provide the collateral pool for 100% US dollar and manage that pool. The second one basically it's decentralized, but the oracle, the person who provides the data feed to the blockchain, it's centralized. And it's also a vulnerability subject to attacks. And also there's efficiency issues. For example, if people trying to stay away from cryptocurrencies, then you are also using cryptocurrency as collaterals. So there's a snowball effect if people are trying to move away from certain cryptocurrencies as collaterals. For example, Ethereum dropped from $1,400 to $200 in this year, and the amount of collateral you can provide obviously volatiles a lot. So in order to be on the safe side, you can only provide very little amount of collaterals. Yeah, sorry about the long-winded explanation. It's a tricky concept.
I get it, and I'm trying to get my head around it, and I'm sure our listeners are getting it much quicker than me, because our listeners are very intelligent people. So what is the process you go through setting up your stable coin? Perhaps that will help explain it and get it clear in my mind.
Yeah, so basically the way we establish stable value is instead of basically chasing the holy grail of pegging to US dollar, which we don't believe it's possible unless you have 100% reserve in US dollar. Instead, we're pegging to a stable value in the physical world. Basically, if we think about the world, we have the physical world, we have the crypto world. The physical world export computing and energy to the crypto world, and the crypto world export cryptocurrencies, essentially financial products, to the physical world. So there's actually a trade between the two economies. Basically, for any trade between two economies, they will have to follow the international finance economics principles. So one of the most famous principle was impossible trinity, which means fixed exchange rate, free flow of capital, and independent monetary policy. These three things cannot coexist at the same time. So in order to have a fixed exchange rate, like a one-to-one pegging with US dollar, so you either have to use the Chinese way, you don't allow free flow of capital, strict capital control, or you have the Hong Kong way, you have 100% reserve in US dollar, and then that become the more like a Tether or other, recently there are a lot of that type of stable coins coming out, issued mainly by exchanges. So for us, we're giving up the pegging, one-to-one pegging from US dollar, but we're pegging to, if you look at the two worlds, the strongest link between the two worlds are computing and electricity. Basically, like miners, basically proof of work miners, like burning electricity and doing computing to support the link between the two worlds. And miners are all profit arbitraging, or they're all profit chasing. When there's profit, they will mine more. When there's less profit, they will mine less. So based on their profit chasing behavior, we can actually establish a long-term equilibrium. So for us, basically in our system, in meter system, each token can be created by burning 10 kilowatt hour of electricity. And since every token's price is the production cost is fixed, basically miner will arbitrage on top of that. And at the end of the day, it's actually pegging to global average of competitive price of the electricity. And if you look at that, it's actually really stable over the long time horizon. We actually have data showed from 1960s to now, the competitive price of electricity, if you measure by US dollar, it went up by 6.3 times. But if you adjust for inflation, it actually stayed the same throughout the time, with very mild changes. So it's actually more stable in purchasing power than any fiat currencies in the world. And the beauty is this can be done completely by math and algorithms, consensus feedbacks, instead of by a third party providing data feed to the blockchain. So it's completely self-sustaining process.
Wow. Okay. It's interesting, and it's more stable simply because the coin is backed by some other stockpile of currency or some other assets, basically.
So basically, the currency is not backed by either a pile of gold or a pile of US dollar, but instead is strongly basically linked to stable values, which is the competitive price of electricity in the physical world. So which make it extremely scalable. I mean, we can issue as many currency as the economy needs, but also no currency will be freely printed. Basically, that brings a discipline to the process, to the monetary policy. The miners will only create the token when it economically makes sense, which means the market price is higher than their production cost. And if you look at currency, we're actually building trust in a completely trustless environment for a new currency. So basically, for any paper-based currencies, one of the biggest concern is because paper are free. So how can I basically trust the issuer of the paper currency can maintain correct monetary policy? So that's become the problem for a lot of developing countries, for example. And because the incentive to cheat is so high on this unit of account. So at the end of the day, whenever the paper currency is issued or controlled by a group of elite people, at the end of the day, they always overprint. So that's why traditionally, paper currencies claim to be backed by gold in the vault, right? So you can go to the bank to exchange for gold at any time. But so that's basically proving I have corresponding gold in the reserve. But that quickly goes away because it's not efficient to do that, and also it's very tricky to maintain such a reserve. But in order to build that trust, that the cost of gold is actually a very good way to defend the monetary policy. So we mimic the same philosophy. So cost of production is basically the way to defend the monetary policy. You never overprint. It creates a barrier so that no currency will be freely printed. And also, because electricity is such a vast available resource, everyone can arbitrage on top of that. So basically make it extremely evenly distributed around the world. And also basically, because it's backed by math and computation, it makes it impossible to cheat on the value as well. So at the end of the day, basically, because mining is such a competitive process, it will drive the market price of the currency towards the cost of production, which is a long-run stable equilibrium.
That makes sense. So tell me about your coin.
Mm-hmm.
What is your coin? What is your coin what's it called, and what's it doing differently from other coins? Because I know that your coin's slightly different, and it's something which I know that I'm quite excited about.
So basically, our coin is called meter. Basically, the reason for us to call it a meter is a meter is a meter everywhere, like in the world, right? So basically, we're like mimicking the currency as a unit of measurement. So no matter where you are, it represents the same value. In our system, it represents 10 kilowatt hour of electricity burned through the mining process. And the target for this, the application for this coin is more to power the decentralized financial system. For example, when cryptocurrency first created by Satoshi Nakamoto, so one of the things he has written in the Genesis block in Bitcoin is at the time it was the second banking bailout, right? So that already represents basically some disappointment against the traditional monetary policy, the fiat currency world. So basically, we're dreaming to have a payment system, peer-to-peer electronic cash payment system that can be a universal global currency. So basically, to power the decentralized economy. So basically, we're trying to complete that mission because Bitcoin is more becoming like an investment asset for people to basically hold for long term or as a store of value or like a speculation tool instead of using as a cash for payment. So basically, Meter is trying to complete the mission of Bitcoin to create a real currency that's long-term stable in purchasing power and also completely decentralized and permissionless for people to join the system and use the system.
That's interesting. So, what motivated you to create this coin? What's the sort of process you went through?
Basically, personally, I get into the cryptocurrency world in 2016. Basically, at that time, I raised a VC fund. One of the investment focus was to invest in blockchain and fintech. So that's how we get into the space. And last year, obviously, there was a boom of ICOs and tokens. So many of our portfolios started to issuing tokens. And we started investing in tokens as well. During the process, we invested about 40 different projects. Basically, during the process, I've been just thinking about are these real currencies? I mean, what are the problems they're trying to solve? And how do we value this? Where are the values coming from? And what are the things missing in the ecosystem? So that's basically around end of 2017. So then we decided we need to really have a decentralized unit of account for measuring values in the ecosystem to complete the mission of cryptocurrency as a real currency. So basically, that's how we started the project. And so we've been working on this since the beginning of the year. And looking to basically have something testnet around next month, November. Actually, it's almost from tomorrow. And we're looking more towards the end of November, and also a mainnet around first half of 2019.
Fabulous. So, when can people get involved with your coin? Would that be the end of November, or is that still the test phase?
So basically, the November release is more a testnet. Basically, people can play around with the network, transferring values, create a wallet, things like that. And next year, it will be the starting point of people can basically start mining in the network, creating the meter token, the meter currency, which is stable, and also participate in the record keeping. Basically, we call it the governance process of the system.
Xiaohan, I was wondering if you had any insight onto the current scene of cryptos and crypto investment, what it looks like, and how people can get involved in Meter.
Yeah, so basically, obviously, right now we're in a bear market. It was pretty crazy, like end of last year and earlier 2018. Now we're entering more like a normal phase of the market. I would say like a lot of scam project will goes away because it's becoming more and more difficult for them to raise funding, and also like a lot of project who's not true believers, they will just simply leave. But like this is actually a good time for like a great project to like start really working on the basics, working on the foundations of the infrastructure to bring like real applications to the scene. So, and also, I mean, like long-term wise, if you look at the historical cryptocurrency market, it always goes into this up and downs, the extreme volatilities. One of the reasons was basically the supply for, let's say, for example, Bitcoin is pretty much fixed. It's always 21 million, including those mined Bitcoins. So because the supply is very inelastic based on demand, so it always goes to whenever you invest in such a system, it always go to extreme volatility. So that's expected, and actually, it may be a good time for people who believe in cryptocurrency in the long run to actually start getting in to the market and start testing waters. Yeah, and basically the goal of Meter, the project, is basically to help regular people who are not familiar with the volatilities in the cryptocurrency world, and also who really want to use cryptocurrency as currency, as ways to encourage financial inclusions, especially in developing countries, to get onboarding with with cryptocurrency. So one of the focus for us is obviously stability. The other is like instance confirmation, fast transaction, and also in the future will be the user experience. We want to make it very easy for like a regular Joes to start using cryptocurrencies even without much background.
Right. So just to repeat that back, just to make sure I've understood, it reduces the risk for the average person to use cryptocurrency because it's less volatile, because it's linked to something they understand.
Yeah. So basically, that's the goal of the Meter project, to make it more stable and more linked to the long-term stable purchasing power. So you can hold it as a way to hedge against inflation, but it doesn't volatile. I mean, it's not that volatile that you will be scared of holding it at all.
And why would you use a coin instead of investing in gold, for example, or just buying some dollars and putting them in the bank, for example?
Yeah. So basically, I think there are two goals. One is for investment. For that, basically, like people are chasing like higher returns, right? So in that case, basically, you can chase for like, for example, holding like Bitcoins for long term, for example, because it's more like a digital gold, but it's easier to transfer and easier to store, and easy to carry around. But the other goal is to basically have a real currency that help financial inclusion, help electronic payment, because like a lot of people in the developing countries, they don't even have access to banking. So cryptocurrency can really help in those scenarios, and also help like cross-border payment, cross-border tradings. So basically, those are the areas we believe our Meter project is trying to target.
And what's the underlying technology? I know that the average person won't care about that, but we love knowing about technology here on the Blockchain Show.
Yeah, so technology-wise, it's we have a very interesting philosophy as well. So basically, if you look at cryptocurrencies, there are actually there is something called consensus. Basically, how do like the crowd of participants reaching like an agreement. So there are actually two consensus in the system. One is the value transfer consensus. Basically, for example, Ian transferred some value to Ethan. So that's a like value transfer consensus. The main focus of that consensus is to prevent double spending. So Ian cannot really spend the same coin twice to buy different products. So that consensus is directly observable to everyone who's participating. But there is another consensus which is implicit, and a lot of cryptocurrencies. I mean, actually, none of the cryptocurrencies actually explicitly describe this consensus. This is how much new value has been added into the system, and the system has to issue corresponding amount of currencies to represent these new values added into the system. So in the proof of work, I mean, there's two schools of consensus, right? One is called proof of work and one is called proof of stake. In a proof of work system, basically it's a miner that helped reaching the consensus for the second one. And proof of stake basically is saying we don't care about the new currency issuing consensus. We only care about the value transfer consensus. So in our system, basically we look at the whole problem and think, hey, if you look at human history, the person who create currencies, like the miners will create the gold and silver, were never the same group of people who's keeping the record, like the bankers and accountants. When you mix them together, like all the existing cryptocurrencies, basically the incentive for people to keeping the record was to at the same time they can create new currencies. When you're mixing these two activities together, you actually create unnecessary conflict of interest. So that's why we see, like in the current, for example, Bitcoin, there is a major confrontation between the miners and the developer community and also the stakeholder community. So in the Meter project, basically, we realize that problem and we divide the two consensus. Basically, we create a hybrid consensus that combines the value of, the benefit of proof of work and proof of stake, and also avoid the problem in both systems. Basically, in our system, like new currencies are created by proof of work, using the profit, leveraging on the profit arbitraging behavior of the miners. But the record, the banking record, kept by the stakeholders. So when we combine the two, we actually have the benefits of both worlds. So like the currencies can be created very efficiently, and the record of value transfers can be kept very fast. And also we have immediate confirmation compared to, like, for example, Bitcoin sometimes take like an hour. Ethereum may take like half an hour to confirm a transaction, which is undesirable for financial type of applications. So in a Meter system, it's instantly finalized in a couple of seconds. So that's like a very high level overview of the technology behind the Meter.
Fantastic. That makes a lot of sense. And where can people go to find more information? Your website's Meter, METER.io.
Yeah, that's right. Basically, we have a lot of information and also answers to a lot of commonly asked questions on our website, Meter.io.
Fabulous. That's good. And I've looked at the website. It's very comprehensive, and it certainly answers a lot of questions I had about this. And it's really quite interesting. So you've got a stable coin. You've got a new way of actually launching this, and we look forward to seeing how the testing goes. Looking forward to you launching it next year. Where do you see this coin in 5 years' time? What's the goal to the coin?
Yeah, the ultimate goal of this coin is to create a global universal currencies. So that's not controlled by any basically political entities or like countries, and beyond geographical boundaries as well. So we want it to be used in as many places as possible, both on the blockchain and also off the blockchain as a like a medium of exchange for trade. So that's the ultimate goal for this meter project.
And what's your marketing strategy to let people know that this coin is out there? Because that's the difficult thing, isn't it?
Yeah, that's true. So basically, we are like finalizing the bootstrap plan. But basically, when we launch the project, we will have a very unique way of encouraging people to participate in the process. For example, to get involved, we talked about we have like a banking consensus, which keeping the record, and also the currency consensus, which create new currencies, right? So we'll have a way to design the process to encourage people to participate and to benefit from the future growth of the system. So we will like officially announce that in the next couple of months. But that's one of the initiatives. The other initiatives is to basically partner as many killer apps in decentralized applications, and also partner with payment and lending in especially in developing countries. So that's the two directions we're working on. So right now we already have a few basically partnerships with, for example, decentralized storage, decentralized networking, and computing. So we're building like a stack of applications on top of Meter project, and we're like in the process of forming partnerships on the payment and lending side as well.
Excellent. That sounds great. And from the blockchain show, and I'm sure all of our listeners, we wish you all the success in the future. That's been really interesting, and I'm going to go away and actually read more about stablecoin, because this is something which is going to change the way that the general public see these coins, a less volatile way of storing your money and using it. Fantastic. Thank you very much for giving us an insight into that and telling us about Meter as well. It certainly sounds like a great project. Thank you.
Yeah, thank you for inviting me on the show. It's my great pleasure to share our experience and our thoughts with you guys and your listeners.
Thank you. I'm sure it's very interesting. And we try to bring a wide range of interviews to our listeners. And I love the fact that you've brought along a new concept, which we can all look into and find out more about. Thank you very much for your time and your support of the show. It's been great speaking to you. And for all of our listeners out there, if you go to meter.io, you can find out more about this very, very exciting project. Any final words?
Yeah, so basically we're doing something very bold and very innovative, and we need everyone's support to be part of the community and believers of what we're doing. So we encourage you guys to go to our website, go to our social media channels, and also reaching out to us. And we would love to talk with you.
Fabulous. Excellent. Thank you very much for your time today. It's been a great pleasure.
Yeah, thank you. Same here.
Thank you. Thank you, listeners, for downloading and subscribing to the podcast. Without you, we wouldn't be able to do this and bring all of these great interviews and information right to your ears. So thank you. Tell your friends, tell your workmates, and tell your family over your family meal about the Blockchain Show and how wonderful we are. Thank you. It's great. And thank you for listening to the end of this one. From me, it's goodbye.
Goodbye from me. Thank you, everyone, for downloading. Thank you to Nikki for setting this up. Thank you to our guest, Xiaohan Zhu. Thank you, Sarah, for doing the artwork. And as always, thank you to my co-hosts, Ian and Mark, who wasn't able to join us this week. Please check out blockchainshow.com for the show notes. And we'll see you back here next week, folks.